Welcome to the Deep Dive. Today we're taking a focused look at BigBear.ai. What's BBAI? A company really operating at this pretty volatile intersection of AI and national defense.
Yeah.
Now, if you've been watching the whole AI space, BBI has probably popped onto your radar. But the headlines, they can be all over the place, right? So we've basically done our homework, our own financial recon mission. We pulled their latest 10K, the 10Q filings, and we've synthesized what the analysts, what the market is really saying. The goal here is simple. Extract the key nuggets about BBAI. What is it? What do the financials tell us? And, what should you actually be watching? Okay, let's unpack this then. We really have to start at the beginning. What exactly is BigBear.ai? What do they do?
All right. So fundamentally, BBAI is an AI company. They provide data analytics and this thing they call decision intelligence. But critically, you need to understand they're not like a consumer app or typical business software firm. Their focus is squarely on these really high stakes, very sensitive areas. Think national security, defense, big government clients, and complex supply chain problems too. Biometrics is another one.
Decision intelligence. It's one of those buzzwords, isn't it? Sounds good, but what does it actually mean on the ground? Like, what are they selling? Can you give us an example from the sources?
Yeah, absolutely. Think of it as giving organizations predictive power. They use massive amounts of real-time data to do this. So, specific examples. They offer advanced sensor fusion.
Sensor fusion meaning?
Meaning taking inputs from, say, dozens of different places, satellites, ground sensors, maybe signals intelligence, and pulling it all together automatically, spotting patterns a human analyst might just miss.
Okay.
They also build things like digital twins, virtual models of complex systems or supply chains. This lets clients run simulations, model different scenarios, predict potential outcomes. Essentially, they sell the ability to anticipate what might happen next.
Okay, so that right away puts them in a completely different category. They're not selling like a better spreadsheet tool. They're selling mission-critical foresight.
Exactly. Foresight, predictability. But, and this is key, operating in that defense and government space brings its own set of challenges. It kind of counteracts the whole high-tech AI excitement sometimes.
How so?
Well, it's fascinating because even though they're this cutting-edge AI firm, their business model is subject to all the typical risks you see in the defense tech sector. We're talking dependency on really long government sales cycles.
Yeah, those can take forever.
Right. Plus, contract renewal risk is always there, regulatory hurdles constantly changing, and of course, budget uncertainty.
Yeah.
Their fate can be tied directly to what Congress decides to allocate in any given year.
And that brings us to where it gets really interesting. Because looking at their recent financial documents, the 10K and the 10Q suggests that maybe contract volatility isn't even their biggest immediate problem. We need to look under the hood, right, at the reliability of their past numbers.
That's the big one. That's the major shockwave that came out in the 2024 10K. The company itself disclosed that prior financial statements, specifically covering 2022, 2023, and even earlier quarterly reports, they all have to be restated.
Restated? Wow.
Yeah. It means that those historical numbers, the figures we all thought were solid facts, they're no longer reliable. They have to be redone.
A restatement is just a massive red flag for any public company. What was the technical reason? Why did they have to wipe the slate clean on years of their own financial reporting?
So the specific cause was pretty technical, actually. It relates to the accounting treatment of their convertible notes, these specific ones due in 2026. It involves complex derivative accounting under a standard called ASC 815.
Okay, hold on. ASC 815, can you break that down a bit for those of us who aren't, forensic accountants? Why does complicated debt make years of financials suddenly wrong?
Good point. It is complex. So when a company issues convertible notes, it's not just simple debt. There's an embedded option, right? The holder can convert that debt into company stock later on. Well, accounting rule ASC 815 says that sometimes that conversion feature needs to be treated separately, almost like its own financial derivative. And derivatives have to be constantly revalued based on market prices. BBAI's accounting team, basically, they got this treatment fundamentally wrong, which led to misstated liabilities, incorrect expenses over several reporting periods, years of it.
So the root cause was a basic, albeit complex, mistake in how they handled their own financing structure. But that wasn't the only red flag in the filings, was it?
No, far from it. Kind of as a consequence of uncovering this accounting error, they also had to confirm something potentially even more damaging.
Which what?
That as of the end of 2024, December 31st, they reported a material weakness in their internal controls over financial reporting.
Material weakness. Okay, that sounds bad. Like the financial equivalent of driving with the check engine light blazing bright red.
It is. It's basically an official admission that the company's own internal systems, the processes they use to generate the financial data in the first place, have a significant flaw. A flaw serious enough that it could result in a material misstatement not being caught or prevented.
Wow.
So you've got this double whammy: historical financials that were wrong, and the system used to produce the current financials is officially flawed.
Okay, that context makes looking at their current performance, which we get from the more recent 10Q, extremely tricky. And based on that Q2 filing, the actual operational news wasn't exactly great either, was it?
No, it was definitely concerning. Q2 revenue came in around $32.5 million. That's a pretty substantial drop, actually, about 18% year over year. But the real alarm bell, I think, was the guidance cut.
The guidance got right. They lowered their expectations for the full year.
Lowered is putting it mildly. They slashed it. They previously guided for full year revenue between $160 million and $180 million. They cut that way down new range is $125 million to $140 million.
Wait. Pulling potentially $40 million, even $55 million off the top end of guidance? That's not just a bad quarter. That signals something more fundamental shifted, doesn't it?
It absolutely does. It signals a major shift in their own near-term confidence. And it wasn't just revenue. On top of that, they completely withdrew all previous guidance related to profit and EBITDA. Just pulled it.
Pulled profit guidance entirely. Why?
They cited extreme contract uncertainty as the reason.
What specific reason did management give for such a massive downgrade? Was it just, the general defense market cooling off or something very specific to BBAI?
Management pointed fingers directly at, quote, disruptions in federal contracts, especially with the U.S. Army. They specifically mentioned the Army's ongoing efforts to consolidate its older systems.
So the Army is streamlining its tech, and maybe BBAI got caught on the wrong side of that.
That seems to be the implication. It suggests that BBAI's expected revenue stream from that major client is, well, at least paused, maybe significantly reduced long-term as the Army integrates everything. It really underscores that contract volatility risk we mentioned earlier. It's not theoretical. It's hitting their numbers right now.
But there was one piece of potentially better news in the filings, right? Their cash position looks stronger. The Q1 2025 report noted they ended with about $108 million in cash and equivalents.
Yes, that is a positive point on the liquidity front. That $108 million, it was more than double what they had at the end of 2024. So yes, it gives them some breathing room.
Breathing room is good.
It is, but this is where, for the informed listener, you have to read between the lines a bit. Where did that cash come from? It's likely spending capital, not earned revenue.
Meaning they probably raised money?
Exactly. They likely raise capital through financing, maybe issuing stock or debt to build up that cushion. So while it absolutely gives them operational runway, more time, it doesn't actually solve the core problems of profitability or contract execution. Which brings us to the big question, right? How is the market, how are analysts supposed to interpret this really unusual mix? You've got cutting-edge defense AI potential on one hand.
Yeah, the sexy stuff.
Right. High liquidity, lots of cash. But on the other hand, deep financial instability, restatements, control weaknesses. How do you value that?
You definitely see a real push-pull in the analyst commentary. It's a clear bull versus bear debate playing out. Let's maybe look at the bullish side first. What's the argument for BBAI right now?
Okay, the bullish narrative, it centers almost entirely on BBAI's market positioning. They're seen as a pure-play AI company, right? Operating in this defense space that, frankly, Palantir, PLTR, has made incredibly hot and desirable for investors.
So they're kind of riding Palantir's coattails, in a way, seen as a smaller alternative.
To some extent, yeah. Analysts who are bullish often frame them as maybe a smaller, potentially more nimble alternative to Palantir. The argument goes they might have an easier time securing certain niche government contracts because they're not as big or maybe seen as less complex to deal with.
And you see that in the stock price sometimes.
Yeah.
The market sentiment, it could be really contagious. The stock definitely had some periods of strong momentum in 2025, just riding that general AI hype wave.
Absolutely. And any specific government contract announcement, even a smaller one, often triggers a massive short-term buy-in, a big spike in the price.
So the bulls are focused on the future potential.
Exactly. They're essentially investing in the potential future revenue if BBAI manages to land a few major sticky contracts. They believe the broader AI and defense tailwinds will eventually just overwhelm these current financial headwinds.
Okay, but then you have the bearish arguments, and those seem heavily rooted in the documents themselves, particularly that lack of trust they create.
They absolutely are. For the bears, that restatement, the material weakness, those are viewed as almost non-negotiable red flags. I mean, if you can't trust the company's past financial numbers, how can an analyst possibly build a reliable, discounted cash flow model to value the company today?
Right. It throws all the models off.
It fundamentally undermines the entire investment thesis for many analysts.
And they must be pretty worried about dilution too, right? Given that cash cushion isn't coming from operations.
Dilution is a huge concern for the bears. Given the company is likely still burning cash, analysts are flagging that BBAI might have to issue more stock or perhaps take on additional debt just to keep funding operations, especially if these Army contract issues drag on.
Which hurts existing shareholders directly.
Correct. It dilutes their ownership stake, and that revised guidance, the big cut. For the bears, that just solidified their case. It proved that contract uncertainty isn't just some theoretical risk factor buried in the K. It's a real, proven, material financial risk that's impacting them now.
So when you look at the analyst consensus, what's the overall picture? Is it leaning heavily one way or the other?
It's interesting. The consensus rating tends to lean towards a moderate buy. But, that term itself is often pretty tempered language on Wall Street.
Yeah, it's not exactly a screaming endorsement.
No, not at all. And the average price target reflects that caution. It's quite modest, hovering somewhere around $5.75 last I checked. This suggests analysts aren't really expecting some massive immediate jump in valuation, despite all the general AI excitement out there.
Any other indicators?
Well, we also saw that some fundamental models, like the one Nasdaq's Willadillo uses, gave BBAI a pretty low rating, suggesting that based on traditional financial metrics, the current valuation and the growth story maybe don't quite add up yet. And places like the Motley Fool consistently note the extreme volatility, huge peaks, deep troughs, ever since it went public via that SPAC merger.
Okay, so let's try to synthesize all this. What does this entire deep dive really mean for you, the listener, trying to get informed about BBAI? You've got to somehow balance this high upside potential being in the right sectors, AI and defense, against these very serious, very structural risks that are laid bare in their own financial filings.
Exactly. Looking at the opportunities, the upside potential, it seems almost purely tied to execution from here on out. If they can actually manage to secure major long-term government and defense contracts.
Ones that stick.
Ones that stick, exactly. Then the potential for rapid revenue growth is definitely high. And that $108 million cash position, it does provide a crucial runway. It gives management time, hopefully, to fix the internal problems without needing to immediately go back to the market for more cash.
But the risks are right here, right now, aren't they? And they seem severe. That contract volatility, especially with the U.S. Army consolidation example, it proves their revenue streams are just highly susceptible to government budgeting whims and bureaucratic shifts.
Yeah, that dependency is a core risk. And we keep coming back to these trust issues, don't we? The restated financials, the acknowledged material weakness in controls. These are major red flags. They will likely continue to impact market trust and probably keep their valuation multiple suppressed compared to peers, at least until they can demonstrably prove they've fixed those internal problems.
And the cash burn risk.
Still there, high cash burn combined with weaker revenue could absolutely force significant dilution down the line if things don't turn around relatively quickly.
So the bottom line, synthesizing the sources, it seems pretty clear. BBAI is almost a textbook example of a high-risk, high-upside, speculative tech name right now. It's definitely not an investment you'd make for stability or dividends.
Couldn't agree more. The core strength is clearly their exposure to that vital aid visas sector, plus the liquidity buffer from the cash balance. But the profound weaknesses are right there too. The operational contract volatility, the serious restatement issues, and those internal control weaknesses casting a shadow over everything.
So if you are tracking this company, if you find this space interesting, the sources really suggest focusing on two key things above all else. First, scrutinize any news around U.S. government contracts very closely. Those wins or losses seem to be the primary triggers moving the stock.
Absolutely critical.
Second, pay really acute attention to the next few earnings reports, the next few quarters. You're looking for clear evidence of execution, signs of stability returning, and, crucially, whether they explicitly state they have remediated those material weaknesses in financial controls. They basically need to prove their own accounting machine works again before the market can fully trust the numbers coming out of it.
Well said. And maybe let me leave you, the listener, with just one final thought to mull over. It kind of gets at the deep irony surrounding the BBAI story right now. Given that this company's core product, what they sell to these massive government clients, is essentially decision intelligence, right? Helping them make critical, reliable decisions based on clean data and solid analytics. How do these reported material weaknesses in BBAI's own internal financial controls affect your trust in the reliability and stability of the company itself?
Huh. Yeah.
That paradox between what they sell and their own internal struggles with reliable data, it's definitely something worth considering as you navigate the very high-stakes, high-reward world of defense tech investing.